Hey everybody, Jerome Maldonado. So today we're going to talk about the housing foreclosing crisis. We want to explain to you guys what's happening in the market right now, and we can also call this our January market update in the real estate sector. I like to do research and update you guys on what's trending in the market and what's happening in the market. And as soon as media gets hold of something, I like to explain to you guys in depth what's happening in technical aspects. So some of this, to some people, might sit back and go, oh my God, Jerome, this is too technical, it's boring. It's not, because if you want to invest in real estate, you want to understand the ups, downs, the good, the bad, the ugly, and profit from real estate, you got to have some of the boring, technical, analytical stuff that you can understand, because as most people sit in a non-analytical sector mentally, as you invest and do something that's going to produce finances for you, a little bit of that has to become real in your mind. I was very, very far away from analytical growing up and have become a lot more analytical when it comes to real estate and things that are really important to me financially, as they should be for you as well. And so understanding that the housing foreclosure crisis, what's happening right now, foreclosures are up by 94% from what they were at this time a year ago. And that was based on analytical statistics that came in at the tail end of the year, November and December, which were actually down from a 5% increase above that, which was up by 98% in October. And so one of the big things is you sit back and you go, oh my goodness, there's an increase of over 94% of foreclosures from a year ago. Why is that? Well, before you panic, hold on here, because there was a lot of there was the moratoriums and the foreclosure forbearances that were happening, and so there were no people filing for bankruptcy a year ago because of these moratoriums. And so when we look at the filing numbers in the month of November, there were over 19,500 filings for foreclosures in the month of November. Now, if you look back pre-pandemic, just 2 years ago, pre-pandemic, the average filing per month of foreclosures was over 90,000 filings per month. So when you look at it pre-pandemic and you look back at 2018, 19, you look back at 2017, 18, 19, and when you take a monthly collective filing of 90,000 foreclosures filed each month, and then you look at where we are right now at a 94% hike, a 94% increase, but only 19,500 filings filed in November, even with a 94% increase in filings, which means that we are substantially lower than where we were pre-pandemic. So what does this mean for the market? Well, let me kind of explain. I look at things predicated to where they are now and where they were at one of the worst economic crashes in history, which is 2008, 2009. And so when you compare things from 2008, 2009 to where we are today, and you're looking for similarities, right? You look at a ballooned market, an inflated market with increased pricing on every asset class, from single family homes to a warehouse to multifamily to even office is up this year by something like 11%, which is unheard of. And so you take a look at a collective look of all commercial and residential real estate, and everything is up. And we look at housing prices and inflation, and everything is up. And so the normal trend is you would sit back and caution yourself and say, oh my God, there's a balloon in the market. Something has to give. Something has to crash. And to that point, at some point in time, sooner than later, you're right. But when we look at it statistically and we look at the numbers show differently than what we were looking at in 2008. So if you look back pre-pandemic, and Autumn Financial looks at everything that's happening nationwide, and they do surveys, and they also do studies of the financial institutions as to what's being pulled on all the credit bureaus. So they look at Experian, and they look at all the big financial bureaus, and they say, okay, what is the average Beacon score for home buyers going in buying new homes? And if you look at the average credit score and the strength of the buyer, Pre-pandemic, back in 2017, 18, 19, the credit score of the average buyer was about 707 on the Beacon scale. Now, you look at the average buyer that's coming into financial institutions today, we have really strong buyers with credit scores in excess of 780 Beacon scores. And so when you look at the comparison to just pre-pandemic buyers to post-pandemic buyers, people that are buying now, we have over a 70 point Beacon score higher than we were just 2.5 years ago. And so the numbers show strength in the buyers. And so when there's strength in the buyers, that it typically decreases the amount of foreclosures. So you go back and you look at 2006, 7, and 8, and you look at what was happening. That's hence why the CFPB was put together, because they were giving loans out to absolutely everybody. People with D credit, people with 650 credit scores and below, 630 credit scores and below, and they were giving home mortgages to these people, and people didn't even have to have jobs. At least nowadays, there's parameters on at least the employment. So if you're doing Fannie Mae, Freddie Mac, you have to have at least a job and show creditworthiness with a job and stability for at least 3 months. Where pre-pandemic, if you just had any credit at all, D credit, and you had a car and a pen to sign a document and go down to the bank, you could pretty much get a loan. That's not happening this time. Right now, buyer's strength shows way more strength than it did at pre-pandemic levels. And so the strength of our buyers right now, hence there's a lot more money in the market, right? So we look at a lot of that. We look at a lot of the analytical data to say, okay, where are we really? So when I look at the foreclosure rates compared to where we were pre-pandemic, I sit back and when I first heard that it were up 94%, I was like, oh my God, where are the foreclosures at? Like I don't see them and I'm not hearing about them. Well, the reason you're not seeing them, if you're like me and you're not hearing about them, is because although they're up 94% and the media makes a big deal about this stuff, right? Like, oh my God, is this the end of the real estate boom? Are these signs showing that, is the writing on the wall, are these signs that are showing us that there's weakness in the market and that housing prices are going to plummet and go down? And then you look at the pre-pandemic numbers of over 90,000 filings filed pre-pandemic to the per month to the filings of only 19,500 now, and you sit back and go, we're only a fourth of where we were pre-pandemic. So we have a long hike to go to even get there. Now, what's happening right now with interest rates? We sit back and most people sit back and say, okay, listing prices are going to go down if interest rates go up. And typically there's an exact correlation to that. As interest rates go up, listing prices typically go down because the more people spend for interest, they have to match that to be able to have the affordability by the listing prices going down. So in December, we saw that there was the listing prices did dip a little bit, but closing prices went up, which means that the price that people are listing their homes for dropped a little bit, but the price that people actually paid on the closing prices actually increased. So home prices are continuing to escalate, but the prices that people are putting them for sale for are starting to go down slowly. Now, is that an exact correlation to interest rates rising? Well, in December, interest rates were on average for a 30-year fixed loan at 2.8%. Now, you look at interest rates in January, they're at 3.38% for a 30-year fixed loan. So about a half a point higher than we were in December. And so when we look at interest rates rise a half a point, and we look at listing prices dropping and closing prices going up, we typically see, when we see about half a point, we're looking at about 5% headway due to the increased interest rates on listing prices. So typically, if the half a point goes up on the interest rates, the listing prices drop by about 5%. And so we saw that here moving into the new year, but closing prices continue to rise, showing strength in our market. And so when we look at the real numbers and we look at what's happening in the market, we sit back and go, how do we evaluate this? Well, the best way is through survey data. So when we go in and we look at like Redfin did a big survey. They interviewed thousands of people and they asked them, look, if interest rates rise, are you more inclined to buying now or holding off and just waiting to buy later on in the future. And historically, when interest rates go up and you sit back and think about it, most people, our minds sit back and go, okay, if interest rates rise, I'm not going to buy because it's more expensive to buy the same asset that I would be buying at a lower interest rate, and my monthly expenditures are going up based on interest rates. So you're throwing more money out in interest, which my wife and I called trash can money back in the recession, when we were servicing debt on assets that weren't producing revenue for us, and we were just throwing money towards payments. We were throwing money in the trash towards interest payments that weren't being recuperated back to us. So anytime interest rates go up, it's more money out to the lender, right? To the bank, to the financial institution. And so when that survey was done by Redfin, what they found out was a couple different things, a couple really interesting facts and data here. They found that if interest rates pushed closer to 4%, that 40% of people that are looking at buying homes would purchase immediately, because they would be scared that interest rates would continue to climb, and it would motivate them to buy now, being that interest rates are so low, because they're afraid that they'll continue to rise. And so an increase of interest rates to 4% actually would stimulate over 40% of prospective buyers to go out there and start purchasing homes. And we would normally think the contrary. Now, another thing that Redfin found out is that the reason closing prices are going up, although listing prices are going down and interest rates are going up, is because over 12% of closings that happened in the last 30 days, people put in down payments through the means of money they generated and earned through cryptocurrency, which is unbelievable. So when you sit back and say, out of 100% of the homes that people put down payments on, 12% of them were put by people who generated income through the investment through cryptocurrency. So that tells me where the world is going. You start looking at crypto, and you start looking at alternative financing and alternative ways of generating capital, and you look at cryptocurrency. Anybody who's skeptical about what's happening right now with crypto, you better reconsider. I was skeptical about it myself 2 years ago. Didn't know whether it was going to come or go. Didn't know what to think about it. And I'll tell you, crypto just crashed this last week. There's going to be volatility in the market, just like the stock market. You know, anytime you have gold, silver, any type of commodity, you take a look at our dollar bill, and you take a look at where it was 10 years ago, and you take a look at where it is today, you know, you'll see that there's volatility in the market. You take a look at crypto, it's good. There's going to be volatility. So if you haven't bought any, buy a little bit. We're looking at buying some this week as well, just to be able to be in the market sector with it. Right? Now, is it our main investment? No, real estate's our main investment. But to be able to be in a sector that's growing, we control the commodities, ladies and gentlemen, you and I. So people sit back and say, what's backing the commodities? We're backing the commodities. You and I are backing these commodities, because we're the ones that are sitting back going, okay, we have billions of people sitting on this earth, right? We have over 7 billion people sitting on this earth. We as the 7 billion are backing these commodities because we are in control of what happens financially to our futures. So if billions of people across the America and across the world are starting to use cryptocurrencies to start buying real estate in other sectors, it's an area that we need to pay attention to, because how is that going to affect our market as we move forward? So look, ladies and gentlemen, the market is still strong. It's still hot. When we look at volatility in the market in regards to real estate, and we're looking at where things are right now, all of the financial areas that would show concern don't at this point in time, which tells me that 2022 is still going to be an incredible year. If you're looking at investing in real estate, you're looking at buying land and building houses, we have a great year in front of us. We have a lot to look forward to. Now, there was one interesting statistic on rents in multifamily real estate. The collection of rents went down this last month from 92%. We were at 94% prior month of rents collected in multifamily in rentals, and we dropped to 92%. So that's a low in comparison to where rents had been collected had been. But there's still strength in the market, and there's a mass need for housing and rooftops. We need over 5 million rooftops built, ladies and gentlemen, currently, right now, just to fulfill the needs. And so a lot of opportunity in the market. There's strength in the financial institutions. Banks are sitting wealthy right now. A lot of liquid capital in financial institutions, and interest rates are still sitting low. Ladies and gentlemen, this is the time. The time is now. It's always time to buy. It's always time to sell. And it's always time to play in the real estate game. It's just understanding where we are in the market and what business techniques to utilize to invest in the right sectors of real estate anytime, any place when the market is either up or down. And it's important to know these numbers. Now look, ladies and gentlemen, for more information just like this and to get notified, give us a thumbs up and subscribe to our YouTube channel. We look forward to seeing you next month for a new update on our financials, but we'll see you tomorrow with more information on real estate. Keep learning, keep investing in you, and I look forward to seeing you next time.